Okay. Assalamualaikum warahmatullahi wabarakatuh. Hello, Mr. Ghofur. My name is Fajar Zulkarnain. I am from Management 22A. So I make this scientific paper for finishing assignment 14 and 15. And why I choose this text, it's because interested about investment, so I wanna learn about invest, and sometimes I wanna collect the money from investment. Okay, let me start uh, from abstract. Okay, in abstract, this paper aims to analyze the importance of risk management in capital market investment. It it explores various risks, including market volatility, liquidity risk, and regulatory change, and emphasizes the need for investors to understand and mitigate these risks through the utilization of risk management techniques such as diversification, hedging, and through analysis. Investor can make informed decisions to strike a balance between maximizing returns and protecting their capital. The analysis method employed in the study examines existing liter literature, market data, and case studies to provide valuable insight into effective risk management strategies. The result of the analysis highlight the significance of implementing robust risk management practice for successful investing in the capital market, promoting financial stability and enhancing investment outcomes. For the keywords, risk management, capital market investment, effective risk management strategies, investment and investment outcomes. Okay, let's start from introduction. This is material one. In recent years, the capital markets has emerged as a prominent avenue for investment, attracting individuals, institutional investors, and even governments seeking to diversify their portfolios and generate attractive returns. However, investing in the capital market is not without its risk. The volatile nature of the market, changing economic conditions, and regulatory development can expose investors to various uncertainties and potential loss. As a result, effective risk management has become an integral part of successful investing in the capital market. So, the aim of this paper is to shed light on the significance of risk management in capital market investment and explore the methods and strategies employed to mitigate these risks. By conducting a comprehensive analysis, investor can better understand the importance of risk management practice and make informed decisions to safeguard their investment. One of the primary risks faced by investors in the capital market is market volatility. Fluctuation in stock prices, bond yields, and commodity prices can significantly impact investment returns. Investor need to be aware of these market risks and develop strategies to navigate through period of volatility. Additionally, liquidity risks such as the inability to buy or sell assets desired price can arise during market downturns or when investing in illiquid securities. Managing liquidity risk is crucial to ensure investors can access their funds when needed. Okay, this is data. I got this data from cbcindonesia.com. So what is the conclusion? And the graph shows that the decline in the stock price has occurred. It will be on January 5, 2023 and January 11, 2023, the stock price fell by minus 38,005 and 0.57% as of 21 January 2022. the stock prices is constantly moving down. The impact is that an investor who invests his model will lose the value of his ownership. So, uh, if this continue and is not handled, then investor will leave the company. So it will be difficult for the company to get capital for business development. The decline in the stock prices make the company lose investor and will affect the company performance itself. What is wisdom? So for investor, it is better to analyze the stock market so that there are no losses. And for company owners, they should also be able to increase the profit of the company so that they do not lose investor. To analyze to importance risk management in capital market investment, the study will use a variety of analysis methods. First, existing literature of risk management technique and practices will be reviewed to provide a comprehensive overview of this topic. This will involve exploring academic research, industry report, and case studies that highlight successful risk management strategies. In addition, to monitor the review, market data analysis will be carried out to examine historical trends and identify patterns and correlation between risk factor and investment outcomes. This quantitative, this quantitative analysis will provide empirical evidence of the impact of risk management practice on investment performance. In addition, real-world case studies will be analyzed to understand how investors have managed risk and different market conditions and the results they have achieved. Finally, the study aims to emphasize the importance of risk management in capital market investment. This analysis will address the various risks investors face, the method used to manage these risks, and the result achieved through effective risk management practice. By gaining a deeper understanding of risk management and its implication, investor can make the right decision, protect their capital, and maximize their return on investment in the dynamic and challenging world of capital market. This is the specific purpose of this research is to number one, examine the current practice and strategies employed in risk management within the context of capital market investment. And number two, to analyze the effective of different risk management method in managing investment risk and improving investment performance. And number three, identify the key factor and variable that influence the success of risk management strategies in capital market investment. Okay, this is the methodology. For A, the study will use cross-sectional design, collecting data at a specific point in time to examine the relationship between risk management practice and investment performance. So, the research design for this study on risk management is capital market investment will employ a mixed method approach. Approach. It will involve both quantitative and qualitative research methods to gather comprehensive data and insight. And B, data collection, gather in-depth information about risk management strategies, challenge, and experience in capital markets. So, data for this research will be collected from various sources. Quantitative data will be obtained from financial database, such as stock market indices, corporate financial reports. And historical market data, quantitative data will be collected through interview with my friend. He is investor. He is the best investor and investment professional, and a market expert. Interview will be conducted using a semi-structured interview guide to gather in-depth information about risk management strategies, so challenges and experience in capital market. And data analysis, the relationship between risk management practice and investment performance measure, and the ethical consideration. Okay, so material three result. Let's change it. Okay, presentation finding. One important aspect of risk management in the capital market is the correct identification of risk. Common risks associated with capital market investment include market risk, price fluctuation, liquidity risk, interest rate risk, credit risk, default liquidity risk, operational risk, and legal or regulatory risk. Okay. Uh, for data analysis, for example, for ex- on ex- for example, an investor who want to invest in stock can identify market risk such as stock price volatility, low liquidity risk, or the risk of regulatory change that can affect the invested company. So, practical implication. Practical implication, the interpretation of the finding has important practical implication for investor and market participant. The study suggests incorporating sound risk management practice can enhance investment performance and reduce potential loss. The finding highlight the importance of diversification and the use of appropriate hedging strategies to mitigate risk in the capital market. This insight can guide investor and financial professionals in making informed decisions and developing effective risk management strategies. Okay, material for this discussion. A. Interpretation of result. The interpretation, the result reveals valuable insight into the relationship between risk management practice and investment performance in the capital market. The findings suggest the effective risk management technique, such as portfolio diversification and hedging, have a positive impact on investment outcomes. By diversifying the portfolio and implementing appropriate hedging strategies, investors can potentially achieve higher returns and reduce the volatility of their investment. These results support the importance of incorporating risk management practice in investment decision-making process. And B, theoretical and practical implication. The study's findings have both theoretical and practice implication. Theoretically, the result contribute to the existing body of knowledge on risk management in capital market investment. The study provides empirical evidence of the positive relationship between risk management practice and investment performance. Thereby validating the relevance of risk management theories in real-world investment scenarios. Practically, the findings of guidance to investor and financial professional in developing effective risk management strategies by adopting appropriate risk assessment techniques, diversifying portfolio, and implementing hedge strategy. A market participant can enhance their investment performance and minimize potential loss. Limitation. It is important to acknowledge the limitation of the study. First, the research focused on a specific time period and a particular market, which might limit the generalizability of the finding to other contexts. Additionally, the study relied on self-reported data and subjective measure of risk management practice, which could introduce bias or measurement error. Furthermore, external factors such as market condition and macroeconomic variables were not extensively considered in the analysis. This limitation highlight the need for caution when interpreting the findings and emphasize the potential for future research to address the limitation. And future research direction, based on the result in limitation of the current study, several avenues for future research can be identified. Firstly, future studies could explore the impact of risk management practice on investment performance across different market and time period to enhance the generalizability of the findings. Okay, material 5, conclusion. The study on risk management in capital market investment underscores the significance of incorporating proactive risk management practice into investment strategies. The analysis has provided valuable insight into the implication of risk management, the identification of risk factor, the effectivities of risk management technique, and the role of investor behavior and risk perception. The findings emphasize that investors who actively implement risk management technique achieve better risk-adjusted returns, highlighting the importance of prioritizing risk management as an integral part of the investment decision-making process. Furthermore, the study highlights the need for comprehensive risk assessment, considering various risk factors that can impact investment portfolios. And the results also underscore the effectiveness of different risk management techniques, such as diversification, hedging, and asset allocation in mitigating risk and enhancing portfolio performance. Tailoring risk management strategies to individual risk preferences and investment objectives is crucial. Okay, that's all presentation from me. Hopefully, I get a high score with my presentation. And thank you, Mr. Ghofur. Wassalamualaikum warahmatullahi wabarakatuh.